Every January, Rolex raises prices. But 2026 is not just another clean sweep. This time, a stainless submariner in the United States barely jumps, while a gold day date leaps by $4,000. The big winners and losers are not who you would guess, and the real motives go far beyond gold costs or tariffs. So, why did Rolex split its price hike, and what does it mean for buyers everywhere? Price hikes in 2026 did not hit every country the same way. In the United States, the average increase landed right around 7%, with some models climbing even higher. Across Europe, the story looks different. Most countries saw more restrained bumps, typically between 2.5% and 6%, depending on the local currency and taxes. These are not just rounding errors. The same submariner or date just can cost hundreds more or less, purely based on where the buyer lives. Exchange rates, import duties, and taxes all play their part, but Rolex does not split the difference evenly. Instead, the company adjusts its list prices market by market, sometimes to offset tariffs, sometimes to keep up with shifting currency values, and sometimes simply to keep global pricing in line. The result is a Daytona in Miami might see a bigger retail leap than the same watch in Milan. There is no single global number, just a patchwork of local realities, each shaped by its own economic rules. Authorized dealers spent January recalculating everything, not just by country, but by metal. The numbers tell a clear story. Stainless steel models, the ones everyone talks about, saw the smallest increases, usually in the 3 to 4% range. That means a submariner no date, once $9,500, now sits just above $10,000. But the real action is higher up the food chain. Two-tone watches, what Rolex calls Rolesor, and which mix steel with gold, landed in the mid-band, with most climbing around 6 to 8%. Then come the full gold and platinum models. Here, the jumps are sharp, 8 to 10%, sometimes even higher on flagship references. A yellow gold day date, for example, climbed by thousands in a single stroke. This is not just about covering metal costs. Analysts point out that Rolex uses these moves to protect margins and reinforce exclusivity, all while keeping entry-level steel watches within reach for first-time buyers. Dealers saw the hierarchy play out at the counter every day. Stainless steel submariner buyers just watched the price tag cross a psychological line. What used to be a $9,500 entry now reads $10,050 at the counter. No new movement, no extra warranty, just a bigger number. But the real sticker shock is not in steel. The yellow gold day date, the watch you see on wrists at board meetings and country clubs, jumped by $4,000 overnight. That is not a typo. Full gold models, especially the day date 40, now start at $48,000 and up, depending on the dial. Somewhere in the middle sits the two-tone submariner, Rolesor in Rolex language. Its price climbed from $17,600 to $18,900, a $1,300 leap that feels less dramatic than gold, but still stings anyone who has been saving up. If you are only tracking the steel submariner, you are missing the real story. The biggest dollar jumps landed on precious metal and two-tone pieces, not on the steel sports icons everyone obsesses over. That is where the real increase happened. Gold doesn't care about marketing plans or watch launches. In December 2025, the spot price broke through £4,400 an ounce, a record that landed right as Rolex was setting its 2026 price lists. When gold costs that much, every gram in a day date or a Rolesor bracelet hits the bottom line. That's the first lever behind this year's price moves. Precious metal watches, especially full gold, cannot dodge the cost of bullion, and Rolex sources gold with near zero waste but no magic discounts. The result, as gold surges, is that manufacturer-suggested retail prices rise, and the jump is sharper for anything with more gold content. Currency comes next. The euro and the dollar have been anything but stable. In the past year, the euro slid against the Swiss franc, and the dollar bounced around on trade news and inflation updates. Rolex prices are set in Switzerland, exports are priced in francs, and then recalculated for every market. If you're in the US, That means a price tag that moves not just with gold, but with every hiccup in the currency markets. In Europe, the weaker euro blunted the increase a bit, but did not erase it. Then there is the trade battlefield. US buyers now face a 15% tariff on Swiss watches, triple what it was before 2025. That is not a rounding error. For a gold submariner, the duty alone can add thousands before anyone even talks about sales tax. The final price on the shelf is a sum of gold's rally, currency swings, and import math. These forces do not care about hype cycles or collector forums. They move numbers, and Rolex moves with them. Rolex doesn't just react to rising costs, it uses them. Every January, the price ladder gets a deliberate adjustment. At the bottom, steel sports models inch up, enough to keep the entry-level buyer on their toes, but not enough to scare them off. Move up a rung, and two-tone watches see a bigger lift, justifying their premium with a new spread. Climb to full gold or platinum, and the price jump gets bold, sometimes thousands overnight. This is not just a response to gold prices or currency swings. It is a strategy to keep the brand's hierarchy sharp and the air thin at the top. Analysts call it ladder management. The idea is simple. Do not let the gap between steel and gold shrink too much, or the allure of the precious metal models fades. At the same time, keep steel popular and just within reach so the dream stays alive for the next wave of buyers. Rolex wants every step up the ladder to feel like a real achievement, not just a rounding error. That is why the annual increase is not a flat percentage. It is a set of calculated moves designed to reinforce the brand's premium status and to train the market to expect that every January the numbers will climb again. Here is the part nobody wants to say out loud. These price hikes are not just about covering costs. They are about control, protecting the brand's image, squeezing out easy resale profits, and making sure nobody forgets who sets the rules in the luxury watch world. Resellers wasted no time after the January price lists dropped. Within hours, pre-owned listings for steel sports models, especially the Submariner and Daytona, were adjusted upward, often by 5 to 10% overnight. Here is the trick. Asking prices moved fast, while actual sold prices lagged behind. On Chrono24 and watch charts, the spread between the sticker price and the final deal stretched wider than ever. Steel watches still commanded a premium, often 20 to 50% above the new retail, but buyers grew wary. Some listings sat untouched for weeks, as would-be flippers tested how much the market would actually pay. Gold models played out differently. Sellers tried to push prices higher, but the jump in manufacturers suggested retail prices squeezed the margin. The gap between what sellers wanted and what buyers were willing to pay shrank, compressing spreads on gold and two-tone pieces. Fence sitters, those waiting for a dip, rushed to lock in before the next move. The days of easy, automatic resale profits were gone. Buying a Rolex in 2026 now means facing a new reality, whether you are walking into an authorized dealer, hunting pre-owned, or thinking about flipping gold. For authorized dealer buyers, the new sticker price is the only price. There are no discounts, and waitlists have not gotten any shorter. That Submariner that finally crossed $10,000? Do not expect it to drop back. If you are shopping pre-owned, check the last 90 days of real sales, not just asking prices. Platforms like Watch Charts and Chrono24 show that sellers moved fast to re-anchor, but not every watch actually trades at those new highs. For gold buyers, the math has changed. A day date that jumped $4,000 overnight might not hold that value on the secondary market, and the gap between what you pay and what you can resell for just got tighter. Small resellers are watching spreads like hawks. Some listings get pulled back after a month if the market does not bite. The bottom line, Rolex did not just raise prices. Rolex raised the cost of entry into the entire category. Every January reset isn't just a number, it's a signal. As Rolex sets new price floors, the real race is over access and perception, not just value. In 2026, who you are matters as much as what you pay. The question is, who gets to play next?